And it's another trading day right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're joining us from. Here's what's coming up in the next 55 minutes. We'll get an outlook for Nigeria's printing industry as stakeholders sound recession alarm. And Kenya secures $684.7 million from the IMF to boost foreign exchange reserves ahead of Eurobond deadline. And oil prices edge higher on OPEC demand estimate. And it's great to have you join us. I'm Ladi Williams. First off, let's get the stories that set your agenda now. See, the National Agency for Food and Drug Administration and Control has officially launched the NAFDAC Green Book, a comprehensive repository of NAFDAC-registered drug products with 7,030 entries. At the launch, the Director General of NAFDAC, Professor Moji Adeyeye, emphasized the importance of transparency as a key aspect of NAFDAC's identity and highlighted the agency's commitment to safeguarding the well-being of Nigerians. Meanwhile, this initiative represents a shared commitment to building robust pharmaceutical oversight framework, ultimately ensuring Nigerians have access to safe and effective medicines. And now to the Apex Bank. Nigeria's central bank says it has cleared up the entire forex liability of 14 banks with a payment of about $2 billion of the backlog across sectors such as manufacturing, aviation, and petroleum. In a statement released, the financial market regulator mentioned that it has also commenced the settlements of forex with foreign airlines. At the same time, the Apex Bank says it will collaborate with relevant agencies to sanction non-compliant forex transactions after its forensic review uncovered widespread abuse, severe infractions, and substantial non-compliance with market regulations. Meanwhile, the CBN has assured that it will continue to settle the legitimate foreign exchange backlogs as it has consistently been doing in the last 3 months. Let's get a check on the oil markets now. See, oil prices edge higher today as OPEC forecasts relatively strong growth in global oil demand over the next 2 years and a cold blast in the U.S. We see that disrupted some oil production. Brent crude futures, that gained about 28 cents to $78.16 a barrel. U.S. WTI crude futures rose about 34 cents at $72.90 a barrel. OPEC in a monthly report said world oil demand will rise by a robust 1.85 million barrels per day in 2025 to 106 million barrels per day. OPEC saw demand growth over 2.25 million barrels per day, unchanged from its forecast in December. And for the grain market now, Chicago soybean futures inched up today, but remained close to a two-year low as traders bet the market would continue to be well stocked despite concerns of a potentially smaller harvest in top producer Brazil. Corn futures also rose slightly, hovering just above their lowest in 3 years, while wheat fell towards a 7-week low. The most active soybean contract on the Chicago Board of Trade, SV1, edged up 0.2% to $12.07 a bushel, while we see soybean there holding up, marking its lowest since November 2021. The Minister of Budget and National Planning, Mr. Atiku Bagudu, says the federal government is considering the option of using undisbursed loans from development finance institutions, such as the World Bank, to fund the 2024 budget deficit. Speaking during the inauguration of the Federal Care Steering Committee under the NG Cares program of the federal government, Mr. Bagudu restates the need for alternative sourcing of financing to fund the budget deficit instead of borrowing.
One of the major sources of cheap funding for our 2024 budget is the undisbursed loans from the World Bank, because of the about $14 billion portfolio, about $8 billion is undisbursed. So if we can accelerate, that is one source of funding for the federal and states. And the remarkable feature of the NG Cares program, states can decide to spend it in agriculture, in women affairs, in water resources, in environment, in training, NDE, and whatever. Most of these loans that are undisbursed come from the IDA. The World Bank give both what is known as International Development Association loan, which is interest rate is about very low, about 1%. So we have reached the limit of what we can borrow under this cheap sourcing. So if we disburse quickly, we can pre off the envelope so that where we need to borrow and we go to the World Bank, we'll be borrowing cheaper money rather than now where we have exhausted the cheap source, only the relatively more expensive.
All right, now to our first conversation. There's so much volatility in the FX market with the Naira weakening in the parallel market, and we also see some weakness too in the official window. To bring us up to speed now, we have Mr. Bismarck Rwani, CEO, Financial Derivatives Company, join us via Zoom. Great to have you on the show, sir.
Good afternoon. Thank you for having me.
Fantastic. So all eyes on the CBN at this time. We've seen some backlogs. There's about 14 banks have been taken care of, according to the CBN at this time, but we still have a couple of other industries, expecting their backlogs also settled, at this time. But now the CBN is talking about some abuses in the FX backlogs. They're about $7 billion, and they're vowing sanctions at this time. What do you make of this?
You see, the whole foreign exchange difficulty that Nigeria faces today arises from a couple of things: structural defects in the way the market is structured. 2, the shortage of supply. 3, the signals, conflicting signals that are going out to the market. Markets are very sensitive. So let us take it one by one. The value of the Naira in the foreign exchange market today is about 1,320 Naira to a dollar. It was trading at about 1,215 about a week ago. Why that sudden depreciation? It coincides with the time when on one hand, we had interest rates in the primary market actually declining sharply, the 90-day rate going down to 2% and so on. And on the other hand, we are having OMO rates going in the other direction. So markets do not like uncertainty and confusion. This confusion and this is beginning to actually step in and confuse investors. 1, 2, yes. Right. 2, we have the Naira has plunged, as I said earlier on, because of these confused signals, mixed signals that are coming out. All right. Secondly, we know that money supply has gone up by 39% in 2023. So that points to the fact that there's a potency of inflation. And while the primary market rates are going in the other direction, it means that there's excess liquidity in the system. Excess liquidity is a major stoking factor for inflation and currency weakness. 3, the Monetary Policy Committee met last in July. We are now going into February. No word as to when, how, and how it's going to be constituted. The Monetary Policy Committee is an independent committee. It's an independent committee which makes decisions and pursues monetary policy to ensure that it's within the framework of inflation, explicit inflation targeting, and made up of independent and also other members. There is evidence for viewers out there. There's evidence to show that when a central bank is autonomous and independent, those economies perform better than the economies that are subservient to political interference. So that's another thing that has to happen. But generally speaking, I think the good news is that oil production has increased in Nigeria. Oil price has inched up a little bit, just at about the same level as the benchmark price. And LNG has dropped a little bit here and there. So generally speaking, there is room. But the good news is also that the federal government of Nigeria hinted yesterday that they will take a $1.5 billion kind of budget support facility, which will help support the currency. But generally speaking, we expect the currency to actually depreciate a little bit before it starts finding value, until something is done about the interest rate policy, which will help at least stop the bleeding of the currency at this point in time. Right now, there's a lot of work to be done, and monetary policy and monetary policy and fiscal policy have to have an alignment and coordination to make sure that the economy doesn't suffer.
Right, and talking about the bleeding naira at this point, and the federal government seeking about $1.5 billion from the World Bank. Talk to me about how this fund is supposed to be used to help the naira at this point, or how it should have been used. What you would recommend, for this $1.5 billion, if they get it? How do you use it to make sure that the naira is actually supported?
No, you have to look at the aggregate supply and the aggregate demand. The demand, the backlog of airlines and the backlog for other commitments, forward commitments that have not been serviced, is significant, about maybe $7-8 billion. I don't know what the figure is. But the $2 billion we got from the Afrexim Bank, we've already pledged 90,000 barrels a day of oil going forward. So when you look at the cash flow, which is important, 90,000 barrels of oil has already gone out of, and that is going to be used to service the disbursement from the Afrexim Bank. The World Bank support program is interesting, but it is not significant. In terms of materiality, it won't go that far. You cannot hide from the fact that, one, you've got to do something about your interest rate inflation differential. One, you've got to open up the market for transparency. That is, if you're having a managed floating system, come out and say, look, the central bank is going to auction $200 million or $20 million or $50 million today. Everybody bid. Then you call the people that have cash calls, Shell, Chevron, Exxon, or whatever. You come out into an open auction. That way, one, we achieve price discovery. Two, everybody will now know who bought it, and they can go there and buy. Right now, exchange rate volatility is not the issue. There's a supply issue, and the fact that nobody knows exactly where, when, and how where you will get your next dollar and at what price. So the uncertainty premium is playing hard and actually undermining the true value of the naira. The naira under purchasing power parity is showing us that it's about 851, 870 naira to a dollar. Using the hamburger index is showing us that it's 1,400 to a dollar. And using the parallel market, it's now showing that it's 1,351 naira to a dollar. Those rates are all over the place. And the difference between, in June 2023, the difference between the parallel market and the official market came down to as low as 4 naira 51. The PPP tells us that the naira is probably undervalued. So what is making the naira trade in the parallel market at such a premium is because of the fear, the uncertainty, and the fact that nobody has come out to say, okay, this is the program for managing this float. This is the supply we're going to put in the market. Let everybody know what the real deal is. That is the thing. It is the central bank is doing as best as it could. They've removed a lot of the restrictions. But market structure matters. And the fact that we must know exactly how much is there. There's too much uncertainty as to how much is there. Once people know that the supply is there, it doesn't matter how low the supply is. And the price is a function of price, demand, and the supply. Then everybody knows, because whatever you import, you will mark it up and sell it to the market. So that is, it's a market structure, confidence, liquidity, and clarity and certainty as to what is happening. Those are the risk factors that are undermining the naira at this point. So my recommendation, number one, let's have a schedule of when the MPC will meet. Let us have a monetary policy framework which are explicit inflation targeting. Let's open up this managed floating system so that there is an auction, an open auction, so everybody sees who is buying, how much are bidding. We've done it before. We did it successfully in this country. And then from that discovered price, we begin to work our way all the way back to bringing the currency within its fair value. I think that's the problem. There are too too many cards that are being kept close to the chest.
Right. I guess we need to show our cards at this point. Thank you so much. Always great having your perspectives. The Bismarck Kurani, CEO of Financial Derivatives Company, and we're hoping for some strength in the Naira soon. Thank you.
You will see it soon.
Thank you, sir. All right, now, let's check on other conversations now. We see listed publishing firms on Nigerian Exchange Limited, such as Academy Press, University Press, and Learn Africa, experienced a 32.8% decline in profit during the first quarter of 2023. Profit dipped from 783.8 million naira in the same quarter of 2022 to 559.8 million naira. A major driver of this remains the rising operating expenses. We have joining us now Mr. Soji Kuforuji, the AGM Sales and Marketing Academy Press PLC, to bring us up to speed on what's happening in the industry. Great to have you on the show.
Yeah, great to be here. Thank you.
Right. So we did hear Mr. Rwani there. We're seeing a lot of volatility in the FX market, and definitely everyone seems to be demanding dollars. Every industry needs dollars at this point in Nigeria. Talk to me about profits in your industry. We're seeing a dip there for 2023, the first quarter.
Well, I think 2023 will, thank you for the question. I think 2023, it's a very fantastic year for the business. Because we can gradually see recession coming in. Interest rates have gone up, and the price of raw materials for the industry, which is basically paper, has gone really up, and by more than 50%. So yes, it is expected that will influence the baseline results of in the industry, and we're trying to everybody, all the players in the industry, trying to look at ways they can develop other sources of income that can augment what they have right now. So,
talking about income, in 2023, it was an election year, and definitely a lot of business, I would expect, from the prints and all of that, for, campaigns and all of that. That didn't add much value?
Much value is relative, because when in Academy Press, for instance, we didn't see it as adding value. We saw it as an opportunity to be part of the players for the process of the elections, because for a long time we've not been part of that process. So we've been invited by the agency that is saddled with the responsibility of the election. For us, it was a great opportunity to be part of that process. But for some establishments, they can see it as a boom. But for Academy Press, we saw it as an opportunity to be part of the process that will ensure an hitch-free election process. So for us, yes, we didn't see it as a boom, yes.
And talking about not seeing it as a boom, we see operating expenses. That grew by about 14%.
Yes.
Across the sector. How did you guys weather that storm?
Oh, well, Academy Press has, we've been around for almost 60 years. We'll be 60 years next year. And we've always had opportunities to, I won't call it opportunities, but we've always seen, because the industry where we operate has a lot of little interest, little influence of government. So we've always had the storms here and there. So the recession that we're talking about, we have embraced it as, okay, the most important part of our business are our employees. And the good thing about going through the storm for us is that everybody is accounted for. Some companies, you see them cutting down on staffs, you see them cutting down on salaries, but we have just kept the team together. And I think the storm just made us stronger. That's
Right.
my conclusion. Yes.
So that means whatever comes, in 2024, with the storm you've weathered in 2023, you have some resilience.
Yes, that's why.
Forward.
Yeah, that's why we're Academy Press is going into other kind of businesses to sustain that. We are diversifying into other processes that is not really influenced by technology, and we hope that is going to improve the baseline of Academy Press so that we can still keep the team together.
I can imagine. Well, definitely, a lot of industries, at this point rely heavily, on importing, raw materials and all of that. And I hear Nigeria, we have a huge paper demand. At this point, if you put up that slide, I will see the paper demand, for about 5 years, quite huge at this point. Looking at the numbers, you can also see that the mills, in Nigeria are not really, producing, the functioning ones, because I don't know if we still have, paper mills, in the country. No, as at now, we have a lot of private investors going into paper mills, but the federal government was, kind enough years ago to develop paper mills, European paper mill, for instance, and as we speak, I don't think that paper mill is up to par. So we have opportunities for investors to come in and develop paper mill, and paper forms, like I said before, paper forms about 78% of any printed material, and so it's important for us to get some kind of relief, knowing fully well that we have investors who are interested in setting up paper mills to reduce the burden of having to import paper. And so because I know paper is made from trees.
Yeah, they're made from trees. Yes,
and I'm sure we have quite a number of trees.
Well, it's not all trees though.
Not all.
It's not all trees.
I'm sure we have the type.
Yeah, well, yes. If not, we won't have people coming in to want to invest in the country.
So we just need to get the mills running, at this point to reduce them, because you need FX to bring in that paper.
Yes, we need FX.
Creating more demand for FX.
Everybody needs FX. FX is a very, very, very.
It's almost becoming like oxygen at this point.
It is oxygen, actually.
With the way things are going.
It is oxygen to keep the business going.
Right.
You need FX. Well, it shouldn't be though. It shouldn't be. I think at some point we need to get to a level where we'll decide that is this the direction to go to? What will the federal government do to ease the stress, especially for importers? And there are ways to solve this problem. I believe there are ways to solve this problem, and I believe that the current government is doing all it can to ensure that FX is not playing a very major role in our existence.
Yeah, we need to reduce reliance as much as we can, at this point.
Yeah, we need to.
We need to produce more and, get things running so we don't have to all be demanding dollars at the same time. It's quite incredible. Yeah. Thank you so much for coming on, Mr. Soji.
Thank you.
Koforeji, AGM Sales and Marketing.
Thank you. I appreciate that. Thank you for having me. It's a very good opportunity to be here. And I thank you for channels. I wish you guys the best.
Thank you so much. Thank you. All right, we'll take a break now. When we come back, we'll head straight to the markets. To stay with us, this is Business Incorporated. All right, time for the markets now. Let's take a look at what's happening. We have Will with all the details with a market that doesn't want to stop running higher.
The market has put on Nike shoes right now. Let's just say the running shoes are really fast. And Usain Bolt is, has got nothing on this right now.
Because the way I see the NGX at this point is like a moving train, and definitely there's some people that are not in that train, and they're like, how do I get on this train?
And it's so
fast.
Is there
a stop somewhere, a pullback? There's no pullback. It's overbought on all time frames, but it just keeps going.
Trust me, the market really has a mind of its own right now. It's more like I'm just moving, and then it's clearing everything in its path, and then we don't.
But nothing goes up forever.
Nothing goes up forever. We don't know when it's going to just go down. And right now, everyone's just being cautious.
Yeah.
But positive sentiments still persist despite the caution. So we're just going to kick off with the markets, beginning with major equities in Africa, where sentiments were positive at intraday. We see Nigeria's NGX crossed the 90,000 points yesterday and still sustaining that level today. We see it up today at intraday 0.18%. And then still good news coming from South Africa. The GSE traded with positive sentiments at intraday, nearly 1% up. And then elsewhere, Egypt's EGX 30 in the green, although below the 27,000 level hit yesterday at intraday. And to the east, we see Kenya closing Wednesday's trading session in the green. Now let's check out activities at the FMDQ exchange with Chuka Nwachukwu, is the head asset and liability management UBA. Good to have you, Chuka. But Chuka, it's midway into the first month of the year. Participants in the financial markets are already setting the scene for the financial year. The first NTB auction for the year took place last week. Now the expectations of market participants was for a general decline in rates across all maturities. Now we saw this reflected in the bids submitted at the auction. However, there was a twist to the market as the CBN announced an OMO auction with mind-blowing interest rates as well. Now, the variance between the results were poles apart. You can see that on the screen there, likened to chalk and cheese by some analysts. Now, the body language of both parties show that they have differing positions with regards to interest rates, while the DMO is obviously enjoying the lower interest rate environment, which somehow reduces the cost of debt for the federal government. Now, the CBN appears to favor a more hawkish stance in a bid to attract foreign portfolio investors and boost the liquidity in the FX markets. But Chuka, can you tell us how much impact this is having on players in the financial market who are always at the receiving end of these financial contradictions?
Thank you, Will, and Happy New Year. Like you rightly mentioned, there was an OMO auction on Monday. 350 billion was offered and sold. So we saw, in terms of comparison in price, we saw 25 basis points drop from last week's auction. The 1 year came out at last week came out at 17.75. Monday came out at 17.5. That's a 25 basis point drop in yield. You know, the comparison between treasury bills and NTB and OMO is they both have different purpose. For T-bills, which is for NTB, which is offered by DMO, DMO primary aim is to ensure that government borrow as low as possible. So as long as the yield is low, it favors it favors government, and so they want to borrow as low as possible. For OMO, CBN obviously is looking to mop up excess liquidity in the system and also attract foreign investors. So it makes more sense for the yield to print out that very high, and so they both achieve a different purpose. For the rest of the week, especially going into the secondary market, we've seen this OMO that came out at 17.5, trading around 11%, and that shows you the interest there are, in these securities. Another point again we need to look out for is liquidity. What liquidity is doing in the market? The liquidity has greatly affected activity in the market. On Monday, for example, system liquidity opened around 250 billion, positive, and by Thursday, by Wednesday, we saw the system liquidity drop as low in negative about 25 billion. That also has to do with the settlement that took place as regard the OMO auction on Monday. So liquidity has really played a key role in terms of driving the activities in the fixed income market.
Okay, so you're talking about liquidity and talking about how that is impacting the economy, especially with the rising prices. December inflation numbers printed higher than expected at 28.92% against the 28.7% forecast by some analysts. But what are your expectations for interest rates, especially when the CBN gets around to holding the first MPC meeting this year?
Well, the inflation for December 2023, the last month, printed at about 72 basis point, upward increase from 28.2 to 28.92. Of course, the uncertainty as regard the MPC now meeting is also playing its own role, and that obviously has affected some of the activities, especially as regard the foreign investors, because everybody wants to know what direction the government is looking to go. What is expected if MPC holds is expected that if you watch some of the communique before with the last MPC, the CBN then, although under a different administration, has repeatedly increased interest rate in order to fight inflation. And so if you look at the inflation figure at 28.92, and then you see where 1 year, even the OMO is trading at 17.5. You see that already investors are under the water, especially as regard the fixed income investment. So I expect that when MPC sits, most of their decision has to take into consideration, the inflation, what's happening on the inflation end. And, also, if you look at some of the factors that influences this inflation, you can see that the major thing there is food inflation, of course, the exchange rate inflation, as well as commodity inflation. So on the food inflation, for example, there are fundamentals. For government to tackle that, you have to look at both physical and then monetary. You can't just tackle it only on monetary aspect of it. And government has to come in terms of security. A lot of farmers, produce. Some of them can go to the farm, some can produce, but doesn't get to the end user. So you now have you have little, you have huge demand of some of these products with little supply. Of course, price will go up. And then, of course, the petroleum subsidy, high cost of transportation, high cost of goods and services, because of the removal of petroleum subsidy. So all these are factors that are affecting inflation. And I believe that CBN is equally looking at this, and that is why on the monetary aspect of it, they continues to mop up excess liquidity in the system using some of the monetary tools like CRL and then OMO.
Interesting analysis there, especially for food inflation, which is continuously driving consumer prices up. But what are we looking at in terms of how is this affecting? We've seen that the equities market is definitely trying to, give investors a return for their money, for their investments. But we're wondering how the fixed income market is doing, because a lot of people moving to the equities market. Can you tell us some of the stocks? Some of the instruments in the fixed income market that investors, market players are leaning towards at intraday? Is there anything interesting going on for them there?
Yeah, the fixed income market is primarily the treasury bills and bonds, and obviously these are the most secured investments you can you have out there. Though the inflation is eating into some of this investment, but I think that investors will look with hope. If you look at government budget, for example, well over 11 trillion, in deficit, and so this deficit will be, they try to cover this deficit through investment in the fixed income market, the treasury bills and bonds, and so I believe that the yield, though we have a low yield presently, but investors should look out for, hopefully before the end of first quarter, second quarter, you see high yields, maybe around the region of, for bond, for example, the longer end, which is 2053, you probably see around between 16 to 17 levels again. for T-bills, we probably see within that 14.5, 15 level for NTB. Okay. So I believe that as long as government is looking to borrow more, they will be forced to come into the fixed income markets. And then, of course, they need to make the use attractive for investors to be able to play in. And so I still believe that a fixed income market is one of the most lucrative markets you can invest in presently.
Thank you so much, Chuka Nwachukwu, Head Asset and Liability Management, UBA, for sharing your perspective.
Thank you.
So we look at other equities in Africa. No, we're going to the Middle East now. We left Africa. We're going to the Middle East, where it's mostly negative sentiment at intraday. We see Abu Dhabi, the only gainer for that region, 0.08% of Dubai, however, in the red, 0.71%. Let's look at Saudi and Qatari, how they traded at intraday. We see Saudi down 1.49% and Qatari down more than 0.5%. Now we head to the US, where stock futures were little changed in early trade on Thursday after the Dow Jones Industrial Average notched a third straight losing streak. Now, Dow futures was down 0.25%. S&P and the Nasdaq futures were down more than 0.5% each. Now, Wall Street is coming off a losing session for the major averages as Treasury yields rose to 4.1%. Now, on Wednesday, the 30-stock Dow dropped 0.25%, the S&P 500 slid 0.56%, and the Nasdaq Composite slid 0.59%, as I mentioned earlier. Investors are worried that a strong December retail sales report, which suggests a robust consumer, could mean fewer rate cuts from the Federal Reserve, much more than they're expecting. Now, currently, markets are pricing in roughly 56% chance of a 25% rate cut in March. Now look to Asia, where Japan's Nikkei 225 was trading in negative territory. It slipped marginally 0.03%. That's what it closed at. We see South Korea's Kospi rallied, though, late to gain 0.17%, and Hong Kong's Hang Seng Index was also in the green, 0.89%, rebounded on Thursday today. While mainland China, if we look at that, it also rose after languishing near 5-year lows. The Shanghai Index, if we look very quickly on the screen, gained 0.43%. And this comes a day after data showed that China's economy expanded by 5.2% in the fourth quarter of 2023, missing estimates of a 5.3% growth. Now, Australian markets extended their losses to a fifth straight day. We see that down 0.63% and closing at 7,346 points. And that's what the markets are doing at intraday. At the close in Asian markets, Ladi, we're just hoping that Nigeria's NGX does not go red, very suddenly, and then catch us unawares. But we just want to see that uptrend kick off, because we've seen that pullback for the EGX 30, and from the 27,000 levels it hit yesterday at intraday back to 26. We're just wondering that.
So we'll see if there's some kind of correlation between the GXs in Africa, the EGX and the Egypt and the NGX in Nigeria. Let's see if there's some kind of correlation there.
Definitely.
Thank you so much,
for that.
Will, for giving us the details from the global markets. And right here, the fixed income market and the equity markets right here in Nigeria. All right, let's head on to Europe now. Let's take a look at what's happening in Europe. We see the World Economic Forum in Davos. It's Switzerland. That's brought together political and business leaders from around the world. Among them is the president of the European Central Bank, Christine Lagarde, who addressed the forum. She addressed the forum, actually, yesterday. We have Lars Holter now from DW to bring us up to speed. Great to have you, Lars. So what did the ECB president have to say?
Thanks for having me, Eladi. So Christine Lagarde was in a discussion on how we can trust the economy. And it was quite interesting, starting off with the question, why do we not trust the economy? And indeed, a good quarter of the audience admitted they don't trust the economy at all. And mind you, these are people at the World Economic Forum. Half the audience said that global inequality was the biggest problem of our current economic system. Environmental issues were another one here. And Christine Lagarde, in her mind, named instability in energy markets as well as supply chain interruptions as the most pressing problems. So lots of issues here were discussed, and as to the trustworthiness of our economic system in general, Christine Lagarde said the problem with people losing trust may be grounded in the fact that too many false predictions have been made in the past by economists, whereas she believes that economists in future have to consult more with specialists in other fields, like climate change scientists or geologists, like with expertise in resources and rare earths, to come up with more reliable economic models. So it was all very interesting indeed.
Right, quite interesting. Did she give any helpful hints towards the ECB's future interest rate policy?
Yes, that's of course what everyone was waiting for. Lagarde said that the European Central Bank was on track to get inflation back to its 2% target, but that victory had not yet been won. Well, what does it mean? It shows that things are going well and according to plan, but that an interest rate cut is not imminent. In a media appearance outside the forum, she also said the ECB could start cutting interest rates this summer, but she very much stressed that any such move would depend on economic data. And what kind of data would that be? Well, Lagarde says she's keeping a close eye on energy prices and possible supply chain disruptions, which she views as key risk factors, as I just mentioned earlier. Also, the ECB closely watches wage negotiations in the Eurozone as well as companies' profit margins for their potential serious impact on inflation. Long story short, Christine Lagarde says, quote, "We are data dependent and there is still a level of uncertainty and some indicators that are not anchored at the level where we would like to see them." I guess that's some cold water on the hopes of many investors who are hoping for more timely action by the central bank.
And talking about investors, what are they looking at in today's markets?
Yeah, it's not entirely unlikely that all this interest rate talk will be most of what investors are looking at today. And that's just because interest rate policy and a hope for rate cuts were so dominant as of late. And, you know, the ECB is not the only central bank warning that cuts might not come as soon as expected. Take the Fed over in Washington, for example, where one official just said that while the U.S. is also within striking distance of the Fed's 2% inflation goal, the Fed should not rush towards rate cuts until it's clear that lower inflation will actually be sustained. And looking at the UK, inflation there has just inched up unexpectedly and kind of dashes hopes there for some quick easing. So while investors have been pricing in quick cuts, it looks like they might not come quite as soon.
Right. Thank you so much, Lars Holter, right there in Berlin, giving us the details. Let's get a check on some stories now. In Africa, we see the International Monetary Fund has agreed to immediately disburse $684.7 million to Kenya, boosting the country's foreign exchange reserve for a critical Eurobond repayment that's due in June. The money includes $624.5 million from an expanded program agreed with the Washington-based lender last year, and $60.2 million from its so-called Resilience and Sustainability Facility. So yeah, we see that Eurobonds coming up in June. That payment for Kenya, we'll see if they get all the funds they need to actually make that payment possible to the investors. Well, let's get a check on the crypto market now. I was seeing a couple of headlines there, but let's look at the color in the market. We see the color in the market, see more pockets of red at this trading hour there. 42,800 for Bitcoin. Ethereum still $2,500, but we see Solana, that's in the green, keeping that $100 level for the price. BNB is also in the green, 0.5%. That as a native coin for the Binance exchange. Tron is also in the green, but we're seeing the dominant color is red right now. So let's look at the sentiment in the market now. It's still a greedy market, 63 points, less than what we've been used to for a couple of weeks, and coming into 2024. So it's 63 points away from the 70 points. But most investors trying to use the fear greed index as a way of gauging entry and exit, into markets. So it's still a greedy market, so investors might be on the sidelines at this time or trying to get back in. But let's look at the crypto headlines. Now we see another stable coin there, starting 2024 with a stable coin losing the peg. That's True USD. That's one of the crypto stable coins there. Investors use stable coins as a way of, coming out of volatility. When they expect volatility in the market, a stable coin is supposed to keep your money stable, your investment stable. But when it loses that peg, that means True USD is supposed to be 1-for-1 to the US dollar. But losing that peg now means it's less than $1. So you've lost money if you were staying in this stable coin, trying to avoid volatility. So it's quite incredible. We're seeing this happen again after the algorithmic stable coin, the pegging, a couple of years back. So we're getting the pegging news again. So Binance has listed WIF. That's another meme coin at this point. Big listing there for WIF, and definitely we've seen that impacted the price. At this time, the meme coins seem to be getting most of the attention. At this point. Now we also see Gemini Exchange, one of the top exchanges in the world, that's gotten approval to list in France. So we see our French brothers that will be having a chance to actually get to trade on Gemini, at this point with this approval. So they're going to be launching very soon. We're seeing a lot of expansion plans there coming from Gemini at this time. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Great to have you.
Great to have you, Ladi.
Yeah, so it's another story now of another D-peg. Solomon, quite interesting. We did see that happen, before with Luna, but now it's happening again. Another D-peg, and definitely this has incredible impact on investors. What are you seeing?
I feel it's basically a case of fear, uncertainty, and doubt. And most persons are quite scared based on previous experience with UST, which we saw crash incredibly. But for True USD, I feel people should relax. There is no cause for alarm because let's not forget, True USD is one of the stable coins that are actually backed 1-to-1. So what that means is any amount of True USD you see online, they have the equivalent in a bank account as US dollar, and they have issued a statement stating clearly that they are very liquid, contrary to fears of them being illiquid. So I feel people should just ease the whole tension and relax. We saw similar happen last year with USDC, and within a space of a week or thereabouts, USDC regained its peg. So I believe True USD would perform the same thing. It would obviously regain its peg, probably within the next 1 week or two.
But why do most of these stable coins lose the peg? Why can't they just maintain that, 1-to-1 or maybe 1 to 0.99, that's about 99 cents? Why do they have to, always lose that peg every now and then?
Most times it's because of it's an order book system and also because of the sell pressure. So what I mean by an order book system is someone can choose to sell a huge amount of True USDT at True USD rather. Someone can choose to sell it at 95 cents instead of $1, and someone else can choose to place an order to buy it at around 96 cents. And you just need a little bit of panic, and most persons would sell off to you at that 96 cents. So it takes lots of understanding and education for the holders of these tokens to understand that they should never create a sell order below $1 or at most 99 cents. So I feel it's all about the market makers sometimes manipulating this market to create some arbitrage opportunities and make more money for themselves.
So at the end of the day, a stable coin is impacted by market forces. It's not about having enough backing of US dollars to be able to settle most of that.
Exactly. So it only takes one known figure or someone to come up with a fake story about the platform not being liquid enough. And you know how the crypto market works. When we see news like that, most persons begin to FOMO. And when you look at True USD, for example, you notice that within the last 72 hours, over $140 million have been moved out of the True USD. People have converted to USDT. So this is majorly because of that news. But so far, so good. They are still holding about $1.9 billion market cap, which is still good news, if you ask me.
Right. So a stable coin is supposed to be a hedge, against volatility in the market. That's why we see, when there's a lot of volatility, maybe with Bitcoin and most of the altcoins, investors then run, into the stable coin, to have some kind of protection. But do you have to now get a hedge against a stable coin that's supposed to be actually stable, but when it loses a peg, that means you actually lose money? So how do you create a hedge? Because this crypto market definitely it can do your head in, at some point. You just wonder how to actually navigate, all of these things. So how do you navigate, the pegging of stable coins as an investor?
Currently, there's no way to be able to navigate the depegging of stable coins. The best thing is you just have to pick a very solid stable coin. And most times I tell people to go for stable coins like USDC that have been around for a very, very long time, and stay away from algorithmic stable coins. So,
looking at the big boys, when it comes to stable coins like the USDC and the USDT that you mentioned, those ones also have some risk too, don't they? Hello, Solomon. Solomon, can you hear me?
Yeah, loud and clear.
Talking about the big boys in the stablecoin market, like the USDT and the USDC from Circle, there's also some risk, with these ones, right?
Technically, so far, so good. No feasible risk yet. Currently, no risk. In terms of USDC, there's no risk. While for USDT, they've been around since like 2017. They've been around, and so far they have a very good track record. They have been able to give us details about their bank statements and prove that they are very, very liquid. So I feel these ones are very safe. The stable coins that I would say are not so safe yet, they are still very experimental, is the algorithmic stable coins, which we saw what happened with UST. The crash was very crazy. And we still have more algo stable coins being released, about 3, 4, 5 currently, that have been existing since last year. So people just need to be very skeptical when dealing with those kind of stable coins.
Right, definitely. So you hear it from Solomon there. If you're going to play with the stable coins, try to avoid the algo stable coins at this time. All right, but Solomon, before I let you go now, let's look at the latest listing on Binance. That's WIF. It's another meme coin. And sometimes you just feel like once these meme coins, move from the lower exchanges, investors make all the profit there. Then when they get to the major exchange, they get that listing, they get one last big hurrah, then the next thing, it goes down from there. Is that what you're expecting with this?
Yeah, obviously, that's what I'm expecting, because most of those meme coins, their exit liquidity is centralized exchanges. So once it gets there, there's no more euphoria, there's no more hype, there's nothing to keep it flying. So we've seen it happen several times, except in the bull markets. That's when we saw something totally different. But since the past 2-3 years in this bear market, it's been the same pattern. We saw it with Pepe, we're seeing it now with WIF, and we'll still see it with so many others. So once it gets listed in the major centralized exchanges, for example, Binance, that is where most investors that have been holding their bags since inception, that's where they start dumping. And that's where it begins to lose interest from newbies or new money that want to buy most of those tokens.
Yeah, it's quite incredible how these meme coins got all the attention in this market. Thank you so much, Solomon Amunde, financial market analyst. Thank you.
Thank you very much, Ladi.
All right, so there you have it. That's the market today in the crypto space. We're still seeing a lot of volatility, at this point. But that's the show today. Thank you so much for watching. You can visit channelcv.com for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.